Despite all these bank runs, why is the market still up? And this is the question I've been receiving over the past weeks. Now let's take reference of the 08 crisis. And during that year, there were a total of 25 failed banks. But just a year before, in 2007, there were only 3. And this year alone, we saw 3 failed banks. There are 2 questions we will be discussing today. Number 1, will there be a tsunami of failed banks coming up? And number 2, what is the other reason why the markets have rallied despite of bank runs? But before that, let's take some time to read through the disclaimer down here. Alright, let's get started and let's look at this failed bank list churned out by FDIC. And I'd like to draw your attention to the year 2007, and we saw 3 failed banks. And before 2007, there were 3 years of peaceful year, and that was the last failed bank was in 2004. Then in 2007, we saw 3 failed banks. Then followed by in 2008, and that was 2007 and 2008 Wall Street meltdown. Then was a crisis, and 2008 alone, that year alone, there were a total of 25 failed banks. And guess what? In 2009, as I do this research, to my shock, I realized that there were a total of 140 failed banks. But after much research, I begin to understand what happened to 2009, because at a point in time, the crisis is kind of over. So what happened in 2009? There's a lot of bank consolidation. But my focus will be in 2008, after 2007, with 3 failed banks, and then following 2008, there's a tsunami of failed banks. So are we heading towards the direction? And this is what we're going to discuss today. So now the question is, despite the bank run, why is the market still up? Now, first, the bank run appears to have stabilized. And I would like to emphasize this sentence again. Bank run appears to have stabilized, at least for now, but it may be just the start of everything, just like in the year 2007. It started with 3 failed banks before the tsunami of bank runs. And so what is the difference from this 3 banks this year, which is SVB, Signature Banks, and First Republic Bank, compared to the 3 banks in 2007? Now, they are much larger in size. That is, we are comparing a few hundred millions in assets for those failed banks in 2007 to a 212 billion assets for SVB and 198 billion in assets for the First Republic Bank. It just happened in the first week of May. Now, it may appear to have stabilized, but do not be complacent. So keep on keeping track of the coming market developments, just like what Jerome Powell said on the 3rd of May after the latest interest rate hike. In the meeting conference, he said this: we will take a data-dependent approach. Our future policy will depend on how events unfold, meeting by meeting. And I totally agree with him. Now, as a retail investor, we can study into the price behavior movement, and I did quite a few videos on that. So market will usually give us early signal, and we should be able to tell before the next crisis hits again. The second reason, despite the bank run, why is the market still up? This is because the inflation seems to be taming. And again, I would like to emphasize this sentence: the inflation seems to be taming. And for this rally to date, it is very much expected in our tutorial earlier this year. Now let's take a look at how we chart out today's market back then, with no hindsight of the bank run today, where I believe this bullishness is going to be a short run. Maybe we'll enter in the first quarter. Now this is what I'm seeing here technically, and what I'm going to do here is I believe that this short-term bullishness will enter into the first quarter as it reaches a certain peak. And you have to understand that around the world, that the inflation is still pretty red hot. In Australia, in New Zealand, in Singapore, in Japan, that the inflation is still on the climb. It seems like there's no stopping. And a lot of, as I conduct different classes, I surveyed different classes, and about 70% of us, the classes, say that they do not believe that the inflation will come down to, I'm referring to the US CPI, will come down to 2% in a sustained manner, at least for this year in 2023. Now, so as the market on the climb, I believe that the market will reach a certain peak and will start to do a range bound. Now, you have to understand that in behavior studies, when the market range bound, it means that it's range. It also means that the market is uncertain. This is what I'm seeing here. I am back, and that was a video produced during the beginning of this year. Now, if the bank run crisis and inflation fear seems to have stabilized, the market will likely to continue to rally to a point where traders felt that the inflation is nowhere near Fed's target at 2%. And then the market may start to get jittery again, but that can be a great news for traders when we can preempt this potential volatility. I will share the link of our past tutorial relating to today's discussion. Keep watching it again and again. You too can get into the market with greater precision. I always enjoy studying the correlation between the markets and to uncover potential opportunities. And I hope today's sharing, it will be helpful in how we invest and trade. Really happy that you stayed through this video. You have many great trading weeks ahead.